if rates are continuing to go up, even when the Fed's dropping, to me, that's not really a good sign.
Hey there. Welcome back to another episode of the Collecting Keys Real Estate Investing Podcast, the show where we teach you how to make massive income, not just passive income. Dylan, it's me and you again today. How things going?
I mean, they're going good, man. They're going better today than they were last week.
Yeah, I'm feeling you, man. We were talking about that earlier in our Scale community call. We do our coaching calls on Tuesdays and Thursdays. The Tuesdays one's always fun. It's middle of the day, so you got everybody in like work mode. Thursdays are evenings, so people sometimes are in whiskey or beer mode. But Tuesday, everybody's cut in really tight, right? And I noticed in our business, and I think you mentioned the same thing, Dylan, that post-election 1 week, so this will be 2 weeks post-election, we already have leads coming in that are awesome. Like we were having kind of a slow lead flow in October that slowed down as we got closer to the election. And then the election week sucked. I don't know that anybody was checking their mail. They were just checking their Twitter accounts and watching Fox News or MSNBC, depending on which side they were voting for. And anyways, nobody did shit. And we just didn't have a lot. And so then this week already starting even Monday, Veterans Day, we had a couple of really strong leads come in. I think we'll get one locked up for sure. The other one, I don't know. But yeah, you kind of had something similar, right?
Yeah, I mean, not only is it more leads coming in, but it's been like the ones who've been on the fence for the past 2 to 3 weeks that I really couldn't, like all the motivations were there, the timelines were there, but they just kind of wouldn't sign the dotted line. And we locked up 3 between yesterday and today.
Yeah.
That I'm just like, what the hell happened? Kind of amazes me that, some people make their decision making based on, the election results.
Totally. Yeah.
That's what people do.
A lot of people do. How do you do this? This is actually a funny conversation to have. Like say you're out on a seller appointment and the seller, brings up politics. What's your strategy? Are you fluid during the conversation? Or are you like,
I usually am.
Are you like, Trump, he's a freaking racist. I hate him. What do you do?
I don't know if I'll go to that extent, but you can get a gist of like their political affiliation,
right.
the way that they're talking, the context that they're using. And I'll just kind of agree with whatever they're saying, to be honest.
Right.
Like you're not going to make a political enemy and then be able to buy their house, right?
Oh, absolutely not. You cannot change a seller's mind in the moment on politics, and you should definitely not. We had an acquisition manager. She was like super, super liberal. And we had this one seller, and this is the first time I witnessed it. This old typical real estate guy, very conservative, in his 70s at this point in time. And this was the 2020 election. And so it was like Trump and Biden. And he was just going off on like, go Trump, can't trust the Democrats. And she just could not like hold it together. Like, so I was there. Of course, I can talk the language. And you're just like, whenever you agree with it, like, yeah, I totally get it, man. Like, what a lot of people are saying right now. You know what I mean? And you don't
keep
have
it ambiguous statements like that. Like, it's fine. Like,
you're not changing who you are, what you voted for. The same thing goes like when you have like one of those people that you're during the election, like, oh man, I don't know. I guess, if Trump gets elected, who knows? I'm going to leave the country. It's like, I've heard a lot of people say that. You'll probably need to sell your house. So like, I'll be here.
I've seen some of the memes lately that's like, oh, if you're discouraged by the results, and you're going to flee the area, I buy and sell houses. And it's like,
I got to laugh at that.
What a ploy. But
that's a great TV ad to be running right now, especially because it'll piss off a lot of your audience, but it'll also be pretty awesome.
One thing that's with, Trump's victory, he is the one that appointed Jay Powell in his first term as the Federal Reserve Chair.
Yes.
And then he, I guess, just in a news briefing the other day, someone asked him like, hey, what if Trump says you have to go? And Powell is basically like, he can't. That's illegal. And I have no idea if he actually can or he can't. I know he appointed him, but I don't know if he has the right to like remove him either.
Yeah, I don't know. That's actually a good question. I do know that the executive branch has technically zero influence on the Fed. They don't work for them. They don't have any connection because otherwise you'd have negative political influence changing our Federal Reserve or whatever.
Right. And they're supposed to be independent. Now, is that
Exactly.
true? That's a topic maybe for another day. I mean, there's
Right.
14 FOMC members across all the different central banks across the United States. They have political affiliations, and most of the time it's to the left.
A lot of
But
times they
like,
do because a lot of times they're economists or big bank CEOs at some point in time. And I believe it's a private. It's like, is it
so
private or
it's
is
like
it?
a pseudo
Yeah.
private, like
Okay.
government private
Right.
enterprise.
Okay.
Um, if you guys want to go down a conspiracy hole, read the Creature of Jekyll Island. But
Never heard of it.
yeah, it's about how the Fed Reserve was basically how it was created in
Okay.
1913 and how it's private and basically other people rule the world. Anyways,
Mm.
but Jay Powell has been more on the, I guess, hawkish side, as they say. Like he's been more strict. They
Mm.
keep doing QT, all this
Yep.
kind of stuff. And Trump is like, lower the rates.
Yeah, of
Please do this.
course.
Trying to,
Yeah.
yeah. And he's a real estate guy. It is what
Yeah.
it is. But I mean, the past meeting the Fed went to, they lowered by 50 basis points. That was 2 meetings ago. Sorry, and then they just had
Yeah.
one on last Wednesday, and they
Yep.
lowered it by another 25
Which
basis
actually
points.
100% surprised me. I did not expect that.
Yeah, I don't think many people did. I think we talked about in the show, like most economists, like 90% thought it'd be a 25 basis point cut and a
Yep.
50.
Yep.
So now we have between the two past meetings, 75 basis point cut, and everyone's like, this will ease the economy, like spending will pick up. What's happened though is like, so like they can control the short end of the curve, which is the Fed funds rate, but the longer duration stuff, like the 10-year, that's actually continued to increase. And a lot of the pricing that we see as everyday citizens is based on the 10-year. That's your car loans, that's student loan payments, that's mortgage rates. And so as these continue to go up, it's kind of almost getting more unaffordable. That was kind of the opposite of what everyone has thought.
Right.
So I guess when I'm pitching this, it's like, okay, how does this affect us as real estate investors?
Mhm.
If rates are continuing to go up, even when the Fed's dropping, to me, that's not really a good sign.
Yeah, to me, that means inflation's still going up. And just, I guess, a little education, if I believe I know this, and correct me if I'm wrong, Dylan, is so the Fed fund rates is not directly tied to mortgage rates or anything. The Fed funds rate is the rate at which banks must charge each other when they're doing overnight lending. Is that correct?
Yes.
Okay. So banks have to true up their balance sheet every single night. Say you're doing loans and you're taking deposits. Say you do more loans and you take deposits. You need to true that up because at the end of the night, the next day, you have to have that money in your balance sheet. And you'll get it when you get deposits tomorrow, but you have to have it. So they go out to the open market and, Chase says, yeah, I've got $2 billion I can loan out right now at this moment. And, US Bank says, cool, I need that $2 billion. It's going to be at whatever the Fed fund rate is right now.
And it's low. It's like 0.5%, but 0.5%
Right.
on billions of dollars is still a lot of money.
It's still a lot of money, right? And so that's how banks at night, they kind of move all this money around to make sure everything is balanced because the balance sheet has to be balanced. And so that being said, a lot of times that as that rate is higher, the banks are going to be less likely to do a mortgage, for example, right? Because they have to borrow more money at higher rates. And then they also it's like risk on, risk off as well. As the rates get higher, things like deals get riskier. So then banks are like, well, I mean, that deal's a lot more risky if the interest rate's higher. So they're not going to want to loan on it anyway. So it's kind of like this natural ecosystem or balance act, but they're not directly correlated.
Right. And mostly the Fed has a lot of influence more on the front end of the curve. And what I mean by that is just shorter duration, really like 2 years or less. And they can do that from manipulating the rate. If you overlay like the Fed's fund rate over the 10-year, they pretty much correlate pretty well. So this divergence that we're seeing now is kind of not unprecedented, but it doesn't happen very often. And so that's what I'm trying to figure out. Like how wide can these things get from each other? And what does it look like if it closes? If it closing being the 10-year and stuff comes down, or does that mean the Fed will have to hike again? And I don't know the answer to that. I think the market will tell us, but
that's pretty scary if they had to hike again. My thought was they were just going to go through the end of the year and even into Q1 and not do any more rate hikes or rate cuts. I just thought they would just stop cutting altogether. And so when they did that 25 basis point cut, I was like, that's actually really surprising. And I wonder if they did it because they're trying to do more of a soft approach. You know what I mean? And say, hey, we know we're probably a little high, but if we just stop now, we just cut. If we stop cutting now, people are going to be questionable. And also with the election, they probably didn't want to, they're probably trying to be apolitical, which I actually think Jay Powell has done a really good job, honestly.
Yes, I do too.
Being apolitical through the last two elections, which is probably why he's still there. And so maybe that being said, as the end of the year comes, they'll just taper that off and try to not do rate hikes, but just try to stay flat for a few months. I don't know. That's kind of my feeling. It just feels like interest, like the mortgage rates went up. It feels like that's correlated to higher inflation. And I believe that the markets, although they get things wrong, because when you put bad data into markets, as in there's bad actors or illegal shit going on, you can't account for that. But the markets, generally speaking, will adjust and account for things before they actually happen. Kind of like they were adjusting as they started believing Trump was going to get elected closer to the election. Markets actually started adjusting and pricing that in.
Yeah,
And
like
when
the
Trump,
poly market stuff too. I mean,
Mhm.
money talks, man.
Money talks, man, and people get a sense, and people start. It's almost like gambling, right? They start moving their money, and even the betting markets changed as it gets closer to the election, and then Trump won, and the markets shifted. And now that there's certainty with who's going to be the president, regardless, the markets kind of did another pop. You know what I mean? And
So
so,
for investors too that are out there, the Fed actually publishes something called a dot plot. And it's their basically like future projection of where they see the Fed funds rate going as the data, they update this in real time as data comes in. So it does change periodically, but you can just Google this and see what it looks like. And not only do they predict where they think it'll be, but they kind of give what are they called confidence intervals on how, confident they are that they'll be right. And just from bringing this up, it says for 2025, the Fed is expecting to cut borrowing costs 4 more times, bringing their key benchmark interest rate to 3.25 to 3.5%. So if you're going into 2025, right now they're positioning themselves saying, we're going to keep cutting. So I don't know. I do that information with what you will, but it's just I think the biggest takeaway here is watching the divergence between what the Fed's doing and kind of
right.
what the market's doing and seeing how those are going to come together.
Yeah. All that to be said, I don't know what the fuck's going to happen.
Yeah, I mean, most people don't. And we're going to
Yeah.
listen to this in 6 months and be like, well, that didn't turn out how we thought.
I never
But,
thought Bitcoin was going to go to 100,000. And now I'm like, God damn, it's going to 100,000.
well, it's at 90 or 88
Yeah.
or 89, whatever it
Yeah.
is. So, and
Yeah.
that's another, I guess, hedge against inflation. People have real
Right.
estate. That's why we buy real estate. That's another tool to have in your tool belt, in my opinion, but it doesn't produce cash flows. It doesn't have tax write-offs. It does,
It
you
does.
can't really leverage it like you can with real estate. So there are other aspects as being a good investor.
Let me ask you about this Bitcoin, because you're one of my Bitcoin experts. It's actually funny. So I started buying again. I just put $10 a day auto drip, just buys, and I told you pre-show I'm going to make some big purchases as I learn more. I just don't know enough to be like, hey, I'm going to drop 100K, put it in Bitcoin. You know what I mean? I don't invest like that anymore. But anyways, so I just made a purchase on November 11th for $10, which is badass that I could buy it on a national holiday. So that's also cool.
Uh-huh.
My last on Coinbase, I sent Ethereum on January 30th, 2018.
Oh, God.
So
Okay.
I was buying something. I think I was probably taking it to Binance. So I had to switch over to Ethereum. So I probably bought Ethereum and then sent it to Binance in Ethereum. And $950 something was one Ethereum. That was the last time I did anything. But should people be putting 1% of their net worth in this stuff or what?
So this is my kind of take on that is real estate's built the most millionaires. Businesses and taking asymmetric bets have created the most,
Yeah.
not billionaires, like at least worth $10 million or more.
Right.
Or, as a net worth or more. And so can you buy something for $80,000 that has the potential to be worth $500,000, $1 million one day? What kind of
Yeah.
real estate can do that for you? You can't. Like, you can't buy a real estate with that kind of asymmetrical upside.
Okay. So can people be investing in Bitcoin and do the same thing that you have done in Bitcoin when you started investing? Is there still that asymmetric bet, or is it just now a mature thing where it's like, yeah, put some money into it. You're going to probably outpace some of the other markets. Sometimes you will, sometimes you won't.
My personal opinion, not financial advice, is that there's still plenty of legs to run. Yeah, it's at all-time highs right now, but there's a limited supply. There's only ever going to be 21 million. And there is infinite demand. You're just now seeing this from outside of retail. You're seeing countries like El Salvador make it legal tender. There's Fortune 500 companies that are talking about putting on its balance sheet. Pension funds have done it. Endowments have done it. And so if there's really a limited supply, which we know there is, and there's
Hmm.
a continuing base of people who are going to buy it, the price has to go up, right? It's as
Right.
simple as supply and demand. Microsoft, I think, is the biggest latest news because they're having a shareholder vote in December about if they should put it on their balance sheet. And I think if you get a company like Microsoft that does it, then that's just going to open the floodgates for all the other major companies to do the same thing.
Is it that they would put on their balance sheet because they think it's better than cash?
Exactly. Right.
Their other
And
alternative in a commodity would be like gold?
yeah, gold is like a $17 trillion market cap. So it's a lot bigger. I think Bitcoin's or like it's 1.5 ish. It just actually passed silver's market cap. So this thing isn't small anymore.
No, it's
Like
big.
it, it's, if you put it in the top, it's in the top 10 of just financial assets in general. Like
Right.
Nvidia and Microsoft are still larger, but it's been around since 2009. A lot of people don't realize that. And the technology has kind of evolved. So long answer is I think everyone should have at least part of it in your portfolio. And if you are older, put 1% in. Or put whatever you're comfortable with losing if you actually think it's going to go to zero. And it would end up just being a naturally larger position of your portfolio the more that it grows.
Yep. I'm bummed. I'm just looking at my thing. I'm like in June 29th, 2017, I bought 7 Ethereum for $2,000.
I don't even know what Ethereum is right now.
I don't
Like,
know what it is, but I mean,
yeah.
it's just a good reference point for how cheap it was. And I was buying, some Bitcoin back then in 2017. And had I focused more on that, I probably would have
I
done
would say it's
okay.
less risky today than it has been because earlier, like, Western civilizations could ban it. They don't want to go around the
Yeah, there
dollar.
is
They
a
don't want to go
lot
around
of
the
weird stuff.
currencies. Now it's so embedded and that even has, political favor. There's a senator out of Wyoming named Senator Loomis, I don't know how to say her name, that literally is proposing a bill to have the United States have a strategic Bitcoin reserve. And they want to buy 1 million coins over the next, I think, 5 years. So it's so
Wow.
intertwined, I think, in Western societies now. Like, I don't think the odds of it being banned are very high.
I think, back when I was started investing in it, it was like super dodgy. You don't know what's going to happen. And then post 2020, it's like, it's just part of the economy and everybody's
Yep.
accepted it.
Yep, exactly. But
Hmm.
you see these people on Twitter or X or whatever you want to call it that are posting financial
Mm.
advice.
Oh, yes.
And in my opinion, they're anonymous. So they're not
Yep.
putting their actual identities to what they're saying. Um, and like my favorite is this FI couple, right? Like that
Oh,
post
yeah.
stuff
Everybody
on.
knows the Phi couple.
And I just think they post some of the most ridiculous stuff. Like before I even dive into their tweets, do you have any burdens with any of this stuff?
Well, I would say this. If you are using a cartoon or a fake kind of persona, like as your picture or whatever, I don't listen to fuck all you say, because if you're not willing to put like your person out there, who you are, and I know like the Phi couple will say that they do, but I don't know if I've ever seen any of their faces. Um, and so I just don't know that I would trust that, because it's like they could be anything. They could be whatever. Like, who knows? Like, they're just saying shit. Like, I've never met the Phi couple. Have you ever met the Phi couple? I've never met the
No,
finance guy. Have you ever met him?
I know I haven't. And
I haven't either. I don't know where they go. I never see them saying that they're going to freaking any conferences.
like most media too, it's like what can get the most views, what can get the most clicks,
Mm-hmm.
what can get the most engagement. And sometimes saying ridiculous things will get the most engagement.
Yes.
And that is not going to be beneficial to a large portion of society.
Right. Totally
And
not.
I actually, going back to the ethos of the show, no one gives a shit if you get a 500% return on $50.
Yeah.
Like that's not going to change your life.
Yeah. Yeah.
Right. So
Doesn't
why
matter.
focus on making more money on top of basically everything else?
Yes.
Because you have unlimited upside, and in order to invest, you have to basically put in a significant amount of money to move the needle to change your life.
Absolutely. I agree. And I would add to that, like, you have all these, well, I'll step back. You have to kind of buck the system in a way of what traditional people are saying, because most of the traditional people you're listening on the internet, the ones that are putting their faces out there, go ask them the last time they did something that they're talking about. Go ask, Investor Girl Brit or Brandon Turner, and the last time that they actually operated at your level. It's a long, long time ago, and things have changed a ton. And so you need to be listening to people that are actually doing what you want to be doing and getting the results you want to do, because passive income comes a lot easier than passive income. Everybody's talking about it now. that passive income sucks. It's super hard to get. And it is, because to get a lot of meaningful passive income, there's no way around a shit ton of investing and a shit ton of hard work. I mean,
Yeah.
we can
Yeah.
all say that.
Well, and anyone who was investing from 2010 to 2020 or 2022, even if you bought a crappy deal, the market kind of bailed you out as long as you didn't
Did.
go insolvent. Like, because
Absolutely.
prices kept going up, interest rates kept going down. So even if you didn't even do the value add, like adding an extra bedroom, finishing it up,
Mhm.
like your prices just went up naturally. So
Yeah,
you
they
could
did.
cash out
Yeah.
refi, like you know, or cash out refi and buy that new roof that you didn't have the money to buy the first place.
One of my best friends that got me into real estate investing, he basically, him and I had lunch yesterday, and he made the comment. He's like, I don't think I'm going to buy any more real estate going forward. He's a side hustle real estate guy, works full time job. His wife works full time job, and they just bought one rental property a year for several years, and they have 10 rental properties. They're probably 40 or 50% LTV on these things, so they got a ton of equity in them. They've
Uh-huh.
refinanced them a couple times and gotten good money out of them. And his cash flow, he's making basically his salary probably is what he probably makes in cash flow, if not just a little bit less than his salary in passive, actual like net clean cash flow. So he's done well for himself, and he's like, I just don't see the opportunity for me personally. Again, he's not a full time real estate guy. He's a side hustle, passive investor guy. He's like, I think I'm just going to focus on the stock market for the next 10 years. Like, just dump my extra cash there. He's like, it'll balance out it'll diversify my portfolio. And so that's really honestly good insight for his position where he's at, because he doesn't have the opportunity to turn up the dial on massive income, because that's not what he's doing. He's not flipping houses. He's not a full time wholesaler off market guy. He has a completely good day job that takes care of him financially. Now he's just trying to build wealth.
Yep. And personal finance is personal. So like he can kind of do what he
Right.
wants.
Right.
It's funny, kind of on the same thread. I met with the seller today. I had coffee with like a guy that I haven't done this in a while, so it's kind of good to get refreshed. But he's 75 years old. At one point, this dude 250 like rental units. Like he had a massive portfolio at one point. And we were talking today. We're going through. I was asking about what he currently holds and this kind of stuff. And long story short, by the end of it, he's like, young man, I'm really impressed. Like honestly, I might call you for some of this stuff. And
Yeah.
he's like, his words, not mine, were, if like I was getting started in today's environment, I would never have had the portfolio that I did.
Wow.
Meaning like it is so much harder than it is today than it was when he was building his portfolio.
Right.
He built some of this stuff. He's like, I could walk down to the account thing, draw my plan on a piece of paper, give it to him, and they'd stamp it.
Isn't that
No
crazy?
Engineer, no architect. Like you can't do that kind of stuff anymore.
No.
And it's just become so sophisticated. It's become so popular. So
super
for anyone who's
competitive.
listening, like it's hard. Don't get me wrong. But you just have to outwork everybody else or be smarter than everybody else. I don't know. There's not really ways around it.
Well, and you have to apply your resources in the best way possible. I like the what was it, the Phi couple, what was that Twitter quote that you read me earlier?
Here, I'll pull it back up. A 2025 goal, have 150,000 in our brokerage account. We can take 75,000 loan at 6.5% charged by our brokerage. We can use that money to fund private real estate deals at 12 to 13% interest and keep the difference.
Okay, so they're going to net 6%?
Yeah.
On their 401k.
I mean, 6% interest only on on $75,000.
So they have to pay 6 or 6.5% interest only. They pull their money out, but it stays in their brokerage account. They go lend it out. So they actually they're not earning in the S&P 500 or wherever they're invested in.
On the 75K, right.
Yep. 75K. And according to the Phi couple, if my understanding is correct, and they're pretty real estate heavy, if you follow their threads, they buy rental properties. They're like kind of like, buy one property a year for 10 years, you'll never work again in your day in your life. And so now they're undiversifying themselves to go into real estate to net like 6% on their 75K investment. So $4,500. That's going to take them a long time to get to 150 when they could also just make 7,500 by leaving it in the S&P 500.
Right. And then that's kind of the whole point of like some of these tweets don't make sense. So you're going to do all this for $4,200, $4,500 a year annually.
Yeah.
Or you could just leave it in the S&P 500 in a compound interest. And by actually taking out the loan, you're probably slowing that by a decent amount. If you're really only compounding at the initial, 75,000.
Yep.
So like this whole premise of, oh, I'm just now a private money lender, like you can say that, cool. But if the goal is wealth and financial stuff, like this doesn't make any financial or mathematical sense to do that.
No, it doesn't. Or just cash it out, pay the penalty, and go make something like go do a flip and make the same amount of money that you have. So say you cash out, you pay some penalties, say you've got like 60 grand, use that 60 grand for the down payment and the repair costs on a flip, you're going to make way more money. And it's like, okay, I mean,
Yeah.
what's the point? You know what I mean?
And
To do some of these stupid things that these people are saying
going
behind
back,
their fake personas.
yeah, going back to our earlier conversation too, um, if the long end of the yield curve is actually going up, you're going to start seeing money markets and CDs start offering 5.5%, 6% again.
Mhm.
So if you're a real estate investor, especially like in the multifamily or commercial space, as an opportunity cost, it does not make sense to go buy a 6, 7, maybe even an 8 cap when you can go put your money and buy a 10-year treasury or a CD or a money market at 5.5%, 6% and to be literally risk free and still liquid.
Yeah, that's exactly the key too. Liquid and risk free. Taking your money out to go loan to other people is really neither of those. What
No,
is
I mean,
neither of
they could
those?
lose a deal depending on how.
Especially if you're not a lender. And
Right.
some of the deals that they post, I'm going to keep picking on the FI couple because some of the deals that they post, are preposterous. It's like those numbers are perfect. And you're
Right.
not a full-time marketing machine, full-time off-market operator where you're able to develop your own leads and like out of the 10 that you get, you wholesale 9 and the one is maybe like a super good deal. Like they're too perfect. It's not true. It just doesn't happen.
Yeah.
And
They
they
just see
always
like the ARV, oh, what's 75% of that? And it'll
right,
line up just so it's the
right.
perfect, textbook thing, which we both know is like that never actually happens.
Never
Because
happens.
sometimes you're a little bit, most of the time you're a little bit over,
Yeah, yeah. 9 out of 10
but
times you're a little over. The 10th time is the one that keeps you saying that you're under.
exactly. But, still, even if that's the case, let's say you burr a property and you're in for 10,000 and it's a $300,000 house. I mean, hell, 10% down would be 30K. So you're
Right.
still out. You're still ahead. Like,
Yeah, absolutely. It's an interesting, I would call it maybe more like finance and entertainment. Everybody's dreaming out there. They're scrolling through their social media and they're just like, oh, that makes so much sense. I can't wait till I can do that someday, or I'm going to
well,
try
I
to do that
think
someday.
some of it is even based on like, it's expensive to live in. I'm not arguing that fact. And I
Yeah.
will go on a hill and say it's harder for most millennials to live than it was for boomers. If you just
Yeah.
look at cost of living versus like salaries and employees,
Yeah.
whatever.
Yep.
So they find like the crowd, they're like, and all of the millennials, Gen Zs are like, it's so expensive to live. And now they become these personal finance gurus that just be max out your 401k, invest in index
Yeah.
funds, like nothing
Oh,
revolutionary, but they're good
no.
at the marketing side of things.
Yeah, exactly. Yeah, they build up a following, especially if it was built up at any time post 2020. I feel like there were some people that didn't exist on social media before 2020, and then they were able to make a good brand because they had a little niche, right? They had some sort of niche that got excitement and got people behind them. And in reality, it's not like good rocket science. I mean, it's basic fundamental shit to invest money. The challenge is it just takes longer than anybody will ever want to know. Not everybody was buying like me. I was so smart, Dylan. Not everybody was like me buying Bitcoin in 2017 and then sold it all
Yeah.
before
Well, like,
2018.
if you sold it, it's your own fault. But, you know, if the goal is to create wealth and then be financially free, I think if you focus on basically it comes down to hard assets to me
Yeah.
because we're going to probably be in a continued inflationary environment.
Mm-hmm.
It's real
Agreed.
estate, it's Bitcoin, it's gold, it's other hard assets.
Yep.
Like that's why freaking like art for like things also went through the roof for other things is because
Yeah,
there's not many of the unique ones, right?
totally. It's supply and demand.
It's just supply and demand.
Yep.
Well, how are we going to transition all this back to our off-market business, especially going into 2025?
Mhm.
I think I'm going to not increase, but maintain the level of marketing spend I've done the
Yeah.
past couple times, and hoping that now that this election's over and we're starting to see this pick up already, that cost per lead will hopefully come down a little bit. Cost per deal hopefully come down a little bit. Even if my revenue per deal is a little lower, then I won't be like the spread is still there to hopefully make
Yeah.
50-60% margins in the business.
I will say this. My experience, anytime the market gets tough, people drop out. Right. And I would say it's been tough for quite a while now. It's gotten tougher recently with the election. I think that we're post-election. I think we'll get kind of back to business, but I still think it'll be a little grindy going into the end of the year. And I think more and more people get discouraged. Somebody that started marketing 4 or 5 months ago, they dropped 20, 25 grand into this business and didn't produce anything. And they're just discouraged, like, screw it, I got to go back to the drawing board. All those people are going to drop out. There'll still be some bottom feeders out there, kind of nickel and diamond some deals. But for the most part, those little solo or middle operators out there, they're going to drop out, which creates just more space and more opportunity for the professional operators who are consistently marketing every single month and consistently closing deals, consistently learning to how to get better at their sales, how to close more deals, how to get more creative on the deals that they underwrite. Guys like you, Dylan, you're going to be out there. You're going to keep doing it. We're going to keep doing what we're going to do. We're going to keep driving forward because consistency and longevity in the market is how you keep this business going, and the bigger your business gets.
And like we talked about on the scale call today, if let's say you've been doing this for a year or 2 years and you have some leads, build up in your CRM, go back through all of the people that you bought a house from, especially if they're an investor, like they're not a homeowner. And if they have another property, reach back out to them like, hey man, I bought this place from you in 2024 or in February, whatever. I see you got another one. I'm doing my homework. Any chance you're going to sell another one in 2025? And I will tell you, I've gotten many deals in the beginning of 2024, just having that one conversation with sellers.
100%. And I think that's such a great idea. That reminds me of it's very real estate broker type, because if you talk to any OG real estate brokers, every quarter they go through their call lease sheet. They might have 250 people that they call. They're all past clients. They're just calling them to check in, right? Because they know if their client bought or sold a house at one point in time, they're going to do it again. And they want to be the first person that they call. They don't want to be the forgotten realtor and they just go find the new realtor. They want to be top of mind. Same thing goes with your clients. A lot of our sellers are not going to be repeat clients because we know their situations, right? They're distressed. They move out of state. They do something.
Exactly.
But those landlords, those people that have more than one property, those sellers that stick in your mind that you knew they're going to be a great person to follow up with. Those are the people that we're talking about. Like, follow up with those people. Just stay in front of them. Stay at top of mind with them. They might not sell to you this month or next month, but give them another call.
There's one, and just to prove this works, there's one seller where I've sold 6 of his houses.
Wow.
One guy. So you spent that marketing dollars one time.
Yep.
And he produces 6 leads or 6 deals.
Best $1 marketing you've probably ever spent.
Well, and then it's just staying top of mind. It's call him every once in a while. And that's like not what a lot of people do, right? Like we've always preached that the follow-up is what's important. But follow up even with ones that, if they have other properties, don't delete them out of the CRM. Put them in warm leads. Put them in something else,
That's a super big tip. That's tip of the day from Dylan. If you have a lead that has more than one property, put them in your CRM as like more than one property guy. And then just call them every once in a while. You never know when they're ready to sell the next property. I'm that guy. I have multiple properties. If I sold one and somebody called me and was like, hey, you ready to sell it? I might be ready to sell it.
Or the guy that I had coffee with today, like I literally, he responded to a mailer that was like a 3-bed, 1-bath, 1,200 square foot house. And I just looked him up on the auditor site and I see that he owns a shit ton of stuff. And so that's when I called him. I was like, hey, let's figure this out. And who knows if that'll end up turning into a deal or not. But if it does, those are like once in a lifetime opportunities.
You wouldn't have known hadn't you tried.
Exactly.
Yep, exactly. Anyhow.
Oh man, I didn't have anything else, Dan. Anything else you want to riff on before we head out?
No, let's get out of here. I think we've bored the audience too much. If you weren't bored though, hit us up on Instagram, InvestorMan Dan, and at Dylan Does Deals. Let us know. Let us know what you like to see from the show. Actually, we're kind of rounding out the year. We're middle of November, going into December. We're definitely going to continue doing the show. But, 2025, new year, new me. Mike and I have always liked to change things up. So if you guys want to hear or see something different on the show, definitely let us know. We're open to changes. So, yeah.
And if you want to be on the podcast, you can DM me and we'll see if you're a good fit or not.
Yeah. We'll see if you pass the sniff test. Definitely DM Dylan. All right. Let's get out of here. See you guys.
All right. See ya.